Hello again, everyone. I'm delighted to welcome you to this virtual discussion of exclusive NKBA research, our annual kitchen and bath market size and outlook. Now, before we get into the most current data, a little background. We had conducted this extensive research back at the end of 2019 when the economy and our industry were doing very well. The market was strong. Our January 2020 edition of the Kitchen and Bath Industry Show was one of the most successful in memory. Our research projected kitchen and bath sales to grow a healthy 7%, topping $158 billion in 2020. This reflected 8% growth in new construction and nearly 6% in remodeling, while kitchens accounting for about $76 billion and bathrooms generating about $82 billion. We were all set to release this data in March, but as COVID-19 began and frankly consumed the world, we decided it was necessary to pause and reevaluate the situation. We re-enlisted our research partner, John Burns Real Estate Consulting, to update the survey for a more accurate estimate of what the coming year might bring. I'm very happy to have with us today one of John Burns' top thinkers, Todd Tomalak, Principal and Senior Vice President, who will discuss some of the critical data we've gathered in a few moments. But back to our updated outlook. As I said, business was booming in North America before COVID hit. The housing markets were healthy in resales and new construction, both of which positively impact kitchen and bath business. Another factor driving the remodeling market is the age of the housing stock. Like all of us, homes are getting older and need some work from time to time. In fact, 65% of the 77 million homes owned in the US are more than 30 years old. Now, that might not seem old in the land of Big Ben or the Coliseum, but here in the US, that age makes them prime candidates for renovation. Interest rates for home purchasing and home equity loans were near historic lows, and NKBA members reported they could barely keep up with the business flowing their way. Then when the economy shut down and we regrouped, unsurprisingly, the revised study put spending at $130 billion for the American kitchen and bath market this year, a nearly 12% drop from $148 billion spent in 2019. This is driven by a nearly 9% fall off in new construction and a 15% decline in remodeling. While this decline is certainly disappointing by itself, there are reasons for optimism, and we will explore these in a moment. Business is down, but it's certainly not out. We have confidence in the American market, as well as the strength and resilience of our industry. Of the $130 billion expected in 2020 kitchen and bath sales, 46%, or just over $60 billion, is attributable to kitchens, with the remaining 54%, or about $70 billion, coming from bathroom expenditures. All dollar figures reflect installed costs, including major elements within kitchen and bathroom spending like appliances, cabinetry, plumbing fixtures, faucets or taps, vanities, countertops, lighting, showers and baths, as well as design and labor. So, why should we be so optimistic? First, despite the current dip in business, fundamentals are strong. Kitchen and bath spending had been growing steadily prior to the pandemic at 9% in 2018 and 4% in 2019. And the combination of very strong business fundamentals and pent-up demand is reflected in positive growth in the second quarter. We're very optimistic about the industry's long-term health. The updated data is based on a survey of 500 consumers engaged in or planning kitchen and bath remodeling or renovation projects. The research includes new sections on the pandemic's effects on project spending and consumer behavior. Some of the key highlights revealed by our updated NKBA K&B market outlook include, as of mid-April, 81% of kitchen and bath remodeling projects had been postponed or canceled. But homeowners said they plan to reschedule 70% of those projects in 2020, an encouraging sign. At the height of the pandemic in April, we expected the industry as a whole to face double-digit declines year over year in both kitchen and bath spending as a result of COVID-related disruptions and to consumer finances and behavior. Kitchen spending has declined by 25% compared to 18% for master bathrooms and 14% for secondary baths. Medium and large-scale projects suffered the biggest losses, with spending expected to decrease by an average of 20% compared to 2019. Spending on smaller projects is anticipated to decline by a relatively milder 9.8%. For projects that continued through the pandemic, designers were less likely to be used at a rate of 25% compared to 38% pre-COVID. This is because of homeowners' desire to tackle some projects themselves in an effort to save costs. Homeowners who continued with remodeling projects during the pandemic lockdown did so at a lower price point and were more likely to use do-it-yourself or DIY labor. Consumers pointed to several reasons for delaying or canceling projects during the earlier stages of the health crisis. These included having fewer resources at their disposal or reduced income, fear of outsiders coming into their home, limited access to industry professionals, store and showroom closures, and fear of job loss. Now, I know a lot of that doesn't sound very promising. The good news is, however, that the desire is still there. Consumers are eager to repair, replace, and remodel their homes because they are spending more time there than ever. Little things that they didn't notice as they were busy rushing out the door to go to work, bring their kids to school, go on vacations or events outside the home suddenly loom large. There is a lingering thought that even when the health crisis is over, they may still work at home, or at least part of the time, or maybe full time. And it is unknown when vacation travel may resume again. So the home's outdoor spaces like exterior kitchens also take on increased relevance. So overall, the residential space becomes even more important. Todd, I'd like to bring you in to talk about the revised K&B market outlook. What does this tell us about the strength of the market, and where should brands be looking for the best opportunities?
Yeah, we think that the market is understated in terms of what's coming around the corner. So as we're dusting off our forecast now, I know you had quoted the $130 billion number before. Our revised number that we're looking at to be published soon is probably going to be closer to 139 billion, with a lot of the difference being we're seeing an improvement in new construction and also in repair and remodeling, but specifically the bookends of repair and remodeling, meaning that the weakest part of R&R coming into the year was the luxury price point, and we were seeing the opening lower price point doing better. We're seeing now both those segments do quite well. We expect low to almost hold its own, -1% this year, and luxury only maybe down mid-single digits. And that really masks over what we expect to come around the corner, which is mostly due to timing.
Let's talk about some more bright spots for K&B. For starters, as I mentioned before, consumers are spending more time at home and realizing the projects they want to tackle. They also have more free time, which can mean more time to work on home improvement. And since they aren't spending money on things like travel and vacations and camps for their kids or going out to dinner, theater, or sporting events, there's more disposable income available to engage in home renovation. Many people feel they are going to be home for a fairly long time and want to make these spaces as comfortable and beautiful as possible. On the subject of financing, 64% of homeowners still use cash from savings to finance a kitchen or bath remodeling project. Active projects in mid-April were more likely to be paid by credit card, about 19%, compared to deferred projects at 13%. And deferred projects were far more likely to be financed with a home equity loan at 11%, compared to 2% of active projects. So Todd, what can we extrapolate about the strength of the housing markets compared to the overall US recovery?
So this has been one of the most severe recessions we've seen in the history of the data, but the recovery is being led by the housing market. And some of the strength that we're seeing in our internal numbers, which front run a lot of the numbers that might show in official numbers like the census, are even stronger than what we've seen the government publish. So I'll just give you a couple examples. Before this crisis began, we were at an all-time low in terms of the amount of homes that are available for someone to go buy, for sale listings. And then the crisis happened, and there was a scamper to get any home that's available that's an improvement from what they were. So even inventories have fallen another 30% below where they were. That means that any home that's available for sale, even if it's not built yet, if it's being penciled, sales are way up. We have several months of sequential growth of 60% new orders year over year, which is front runs the housing start number. It hasn't shown up in housing starts yet, because there's construction delays. So that's all in the pipeline. It's just really evidence of how strong the housing market is. And we're seeing the same thing on the resale side too. Everyone wants to improve their home and they're willing to wait to get it done.
Wow. So as you say, some of these numbers haven't been reported yet, and this is showing unbelievably strong data and trends. Where is the data coming from that you're seeing, and how will this impact our industry?
Yeah, a couple sources. So we do a huge survey of home builders every single month. It's the earliest read on Wall Street. Gives us about 20% of all homes sold are picked up every month. And what they're telling us, so their signed contracts, which front runs when their shovels hit the ground, have been growing, 60, 70% the last several months, but they haven't been able to build. So that's going to turn into the start of home construction. But due to construction delays and slower projects, a lot of those orders for kitchen and bath projects won't happen probably until next year. We could see a wave of pretty strong kitchen and bath orders just due to the timing issue. And then add to that, within the existing home market, we're seeing a lot. We do a monthly dealer survey, and one of the things that we see that's real clear is just that projects are delayed because people are afraid to let professionals in their home, but they still want to get the project done. So this is really a timing issue. We expect a lot of revenue to be booked in 2021 just due to those projects that are in the pipeline coming of age at that time.
That's really interesting and very encouraging. And here's a key point about our industry in North America. The kitchen and bath market tends to recover more quickly than other indicators in times of economic uncertainty, and it's closely tied to the housing market. A strong housing market leads to healthy remodeling growth, and applications to purchase a home are once again on the rise after a major decline at the start of COVID-19. Mortgage rates have reached historic lows these past few months, with some loans under the 3% mark, which is the lowest in a half century. It's great news for home purchases and remodeling, and it's a great time to take advantage of these positives and consider taking a position in this market. In fact, while we acknowledge that the economic recovery from COVID-19 will be long and uneven, one area that has shown strength is home ownership. Perhaps it's an effort to escape densely populated urban centers or apartment complexes, or perhaps it's to take advantage of those low mortgage interest rates. Whatever the motivation, compared to the same quarter a year ago, an additional 7.5 million households joined the ranks of those who have achieved that piece of the American dream, home ownership. And we'll bet a lot of them will want to update their kitchens and bathrooms. This gain brings the total number of households who currently own their home to 77 million. Again, the highest in history, and 10 million more than just 4 years ago. That's an increase of nearly 10%, also the largest leap historically. There also has been some new thinking about our homes in the past few months for obvious reasons. Nearly 1/3 of Americans say the pandemic has changed the way they use or think about their kitchen or bathroom, in particular with an increased focus on sanitation, quality, function, and design. That number increases to nearly 40% when at least one member of the household is working from home. Consumer interest in certain product categories has also skyrocketed as a result of COVID. For instance, in the second quarter, almost 70% of firms surveyed reported seeing an increased interest for air purifiers, and 50% reported surging demand for touchless faucets and antimicrobial door handles. When asked if they wanted to undertake renovation work in their kitchen or bath in response to the pandemic, 19% of households with at least one member working from home said yes. Todd, let's look more deeply into the second quarter KBMI, the Kitchen and Bath Market Index, which revealed some very positive movement for our industry. For instance, while sales are still projected to be down for the year, that projection improved in the second quarter to a decline of about 4.5%, from a nearly 14% drop that was forecasted during Q1. And the index measuring future expectations has also improved considerably to a rating of almost 62 compared to current conditions, which weighed in at about 31. Tell us about what you find most encouraging about the second quarter KBMI results for brands considering a foray into the market here.
Yeah, I mean, the second quarter KBMI, which I got to say is probably the most practical read of this important industry that's available anywhere, because it gives us a sense of what's in the pipeline. The second quarter KBMI is a sign of hope, because We see forward expectations are very, very positive based on interest that the participants are seeing. A lot of the issue is just execution. It's hard to get into the home. It's hard to measure the space. There's limitations due to COVID. There's supply shortages. All these things we know. The good thing is all those things can be fixed. The biggest evidence that we're seeing is that if we look at who was able to do home improvements, it was DIY people at home. That part of the market was on fire, just did fantastic. The rest of the market is going to catch up as some of those more practical operational things get cleared up.
It's great news. Let's now talk about the luxury segment of the market. What kind of activity is this segment seeing, and what factors are driving luxury remodeling and replacement?
Yeah, let me tell an anecdote. So, coming into the year, we track the whole housing market, and I think to answer your question, you have to think about what's happening in the housing market. There's a whole story of luxury homes, in Greenwich, Connecticut, similar in Florida, that had been sitting on the market for several years, but no one had been bidding on them. So, multiple price cuts, no one's buying them, very slow moving market. And then COVID happened, and we saw a wave of people move out of the cities into second homes, vacation homes, most of those at the luxury price point. All of those luxury homes, for the most part, are gone from what we can tell. And carrying with that is the home improvements that go along when people buy those homes and update those homes. So we know historically, even if there wasn't a pandemic, luxury usually led the market out of every cycle. So we believe that'll happen this time too, but you're adding to it a really unique dynamic where the home just became more important. And now there's a wave of luxury homes that have just been purchased that are going to be renovated probably over the next 18 months.
Can you estimate in any way at this point how long this resurgence might continue, and what brands can do to capitalize on this activity immediately?
Yeah, we think it's going to be prolonged for some time. The near-term bounce is going to be at either the entry-level price point. So if you happen to be in position where you have products that are there that you can sell, great. Go find a way to get your product at the low price point. Next year, if there's one place you want to be, it's going to be the high deluxe price point. And let me just give you some examples. So we see a lot of the backlog of orders that have not yet become housing construction projects, and we see similar things for repair and remodeling. If you just do the math on all these delayed projects, when they will come to fruition, we could get to a 30% growth number in new construction, like general building product spending, which includes all sorts of other things in kitchen and bath next year, just due to the favorable timing. That's going to be led by a lot of the luxury categories. So make sure that when those orders go in, your products are in the right showrooms, or your showrooms are set up and you have the right conversations and you're dialed in with your designers, because those orders are coming. It's just a matter of when they get ordered.
What kind of products or technologies might be at the forefront of this luxury market?
Yeah, we spend a lot of time trying to understand what type of, what's going to be the next leading edge. I think there's a lot of focus that gets done on tech. I'm less sold on the category long term, just being a luxury story. But one thing that we're seeing is a lot more thought around how the kitchen is laid out in space, at least within a lot of the new home. So, for example, there was a time, generally in any luxury home, where you had these big, great open areas. That was just a truth. And in fact, even on all the remodeling shows, the first thing they would do is open up the walls and create a big open area. And now we have a bunch of people locked at home with the experience of maybe trying to work from home while their kids are trying to do school from home, and it's noisy and there's a lot of clutter and there's a lot of problems. So we see probably a peeling back of that. So kitchen features that remove clutter, that make life a little bit more calmer. That could be things from, you have your own research on color or things like that, but I know there's some appliance manufacturers that have spent a lot of thought and time into how to make the room just simpler and less visually cluttered. We think that the home is going to be a haven, and also where that'll evidence itself, which we've already seen in some of the data, is outdoor kitchens too, which we really haven't talked about. But there's been a resurge in spending in the backyard, outside of the home. All we have to do is look at some of the decking manufacturers, which have recently IPO'd. Their stock is up 30% in just a month. because the backyard has become so important. That's basically an extra kitchen that gets to be now in the renovation cycle.
Interesting. You talk about the simplistic environment. So in doing a recent kitchen remodel, very thankful that we thought through that, because my three young virtual schoolers right now are driving my wife completely nuts. And the simplistic view of that certainly reduces the stress. And I think that's going to be a big part of a lot of the design going forward, as you say. Let's talk about consumer priorities. With consumers spending so much time in the home, kitchens are very high on their priority list for remodeling, or at the very least for replacing appliances or other components of the space. So what kind of traction do you expect to have is it possible to predict how long it might continue?
Well, yeah, that's a really important point. So there's basically two things we think that are happening. As you mentioned earlier, there's this initial wave of projects that were planned, and then that the plug got pulled. From the surveys that we've done that I'm seeing the data of now for those kitchen and bath projects, 99.9% of those who told us that they flat out canceled the project, this wasn't postponed, that it was canceled, tell us that they probably will do the project again, or at least they're strongly considering it. So I think the general dissatisfaction that's associated with having something in your home that you just don't like has just become a timing issue of when you have the financial kind of wherewithal and ability to go do it. That's at least what those same households are telling us. And at the other end, there's a wave of unplanned projects that we're seeing happening now that maybe they would have gone on vacation, or they would have spent their money in some other way. The home has just gained some share of wallet. We think that that's fairly permanent. We did an independent survey just on how, now this is broad-based in housing, so take it for what it's worth, but
Sure.
the general sense that we got from homeowners, so they're already in a home, they already conceivably liked their home when they bought it, was that 20% of them didn't like it enough after COVID that they were going to move over the next 5 years to some better home. And 50% of the householders were going to spend more on remodeling than they planned before, but they weren't spending it this year. Now, it could be in other areas of the home, it could be other, but I think that general idea of, yeah, you probably got a little bit of unplanned project boost in 2020 at the bottom end, the DIY price point, but the rest is all where the kind of the gravy is, and that's in the pipeline probably over the next few years. We think it's pretty long term. I'll just give you one more anecdote. There was a study done years ago of what happened to first-time drivers of their car, 16, 17, 18, when they experienced the fuel crisis in the 70s. And what they found was that going through that experience as a first-time driver permanently changed how much share of wallet they spent on their car. They spent less, about 10% less, because it was negative. We think it could be the opposite. So you've got, the entire, everyone lives in a home. We all have been locked down. It's very plausible that we see some permanent shift towards the home, just permanently gaining a little bit more share of wallet. We don't yet know what that number will be, but so far, all the numbers that we're seeing support that directionally.
Definitely positive signs for our industry. From analyzing the multitude of data available from John Burns, what kind of preview can you give us for the third quarter KBMI, which, just to remind our viewers, is the NKBA index that provides quarterly snapshot of current conditions, future expectations, and main concerns and challenges faced by our industry?
Yeah. So Bill, I think I would say, first of all, everything you said is correct. I agree with you. But the KBMI is so much even more. I've been in, all I've done for years is measure kitchen and bath spending. I was one of the number one manufacturers. If we would have had this there, it would have been the most practical thing. Here's what I expect that we're going to see. So we're rebounding off a period where general conditions were very poor because construction had to stop. And that's reflected in the index. But the indicator within the KBMI that looks at the future book of business is really one of the most useful leading indicators, because it gives us a sense of what's in the pipeline. That's very robust. And at the same time, in the same report, we read about what a problem there is from an operations standpoint, meaning that there's supply chain coordination, appliances aren't arriving on time, it's hard to get people physically into the home, there's other limitations. So it's really an execution story much more than a demand story. Demand is very positive. Now it's a scurry to see who can book the business and who's going to recognize that revenue because they've delivered on time and delivered the right type of products. So I think it's one of the most opportunity signaling mixes of the indicator that we've seen, at least in the last several years.
Any thoughts on the effects of the pandemic or longer term prospects for our business? I mean, you touched on a little bit this before, but can you go into that a little more detail?
Yeah, we think it's a remodeling in particular. Now we think new housing is a great place to be. We touch that part of the business a lot, but remodeling in particular, and kitchen and bath within remodeling is probably one of the most attractive places within the home that you could be exposed to. And I'll give you just a few reasons why. So for the last 2 years, we've seen such little capital flow in to invest in new land and new developments and new communities that there's just been a shortage of new places to build. Now that's not new. There's been underbuilding going on for some time, but the fact is that we're seeing so much demand for people to switch to a better home or improve their home, and there's not enough homes, which means they have to improve the existing housing stock. I was thinking about the Love It or List It TV show that maybe you've seen, right? Where it's kind of this scenario of where people either move or they have to improve their situation because their current situation isn't. In most cases, they stick with their existing home and they renovate it because they did like their home at one point. It looks like the making is for that to continue. We're very hesitant. We're not known in the industry as being overly bullish generally. Like we need to say what we need to say because we see the industry pivoting. We continue to raise our forecast because we're seeing such, almost unbelievably strong numbers rolling in. We think it's a shift in how the consumer is prioritizing the home versus other goods.
Right, makes sense. Todd, terrific insight. I want to thank you for such valuable conversation and sharing your observations about the current state of the market and what we might keep an eye on going forward. So for our viewers, to recap quickly, a few takeaways from today's conversation. First, even with lower projected sales this year compared to last year, the kitchen and bath industry is still poised to generate $130 billion in revenues in 2020. Second, 65% of homes owned in the US are more than 30 years old, making them prime candidates for renovation. Third, interest rates for home purchases and home equity loans have been at near historic lows, and our members reported that they couldn't keep up with the business flowing their way. Fourth, the housing markets are very strong, with lots of activity in new home construction, as well as sales of existing homes. And finally, the kitchen and bath industry is usually first to be hurt during times of economic challenge, but it's also among the first to emerge. So pent-up demand is strong and prospects are very promising. Thanks again, Todd.